More interesting than even the FOMC, the dollar. I mean, the dollar's at a 4-year low. Like, what is the deal? I mean, what's really the deal with the dollar here? It's been getting smoked, and it's been a volatile time period in the dollar over the last couple of years.
100%. If you will indulge me, I'll take you through a quick walkthrough of what's come across my desk and interpreting this dollar story over the recent few days, past weeks even.
Cool.
But you're absolutely right. The headline, dollar breaking multi-year support levels across the board on Tuesday. Yesterday, we had, spin the wheel for major currency pairs. We had euro dollar above 120 for the first time since 2021. British pound similarly above 138. US dollar Japanese yen down 4% since Friday. Dollar Swiss franc approaching levels we haven't seen since 2011. And the Australian dollar above 70 cents for the first time since 2023. So across the board, remarkable US dollar weakness, and a few catalysts over the past few days that really sent this into the stratosphere. The headline from a lot of major news outlets was its 4-day decline, the biggest since April, the tariff announcement of last year. And so Tuesday's catalyst yesterday, we met, we'll get into the week before, but when we woke up in the U.S., we're already meeting a U.S. dollar that had weakened gradually throughout the European session. And then right after U.S. market open, we got a consumer confidence number that printed at its lowest since 2014, a seemingly mid-tier data point, but enough for market participants to latch onto and continue this kind of sell America trades, reduce our risk in U.S.-based assets such as the U.S. dollar. And that pressured the dollar throughout the morning. That pushed euro dollar to 119, which we hadn't seen since 2021, I believe. And then Trump got on the horn in the afternoon, speaking to reporters, and he was asked outright about the dollar's decline, and he dismissed it almost altogether, saying he thinks it's great. He wanted the dollar to be free, seek its own level, calling that the fair thing to do. Even suggested he could move it up and down like a yo-yo. We'll get back to that in a second because it gets a little funnier. But markets instantly latched onto that, and we hit all those highs or lows for the dollar that I just mentioned, those multi-year extremes. And this comes on the heel of why, you ask yourself, why did we latch onto this so much? And it comes on the heels of last Friday, an interesting wrinkle in the US dollar Japanese yen intervention story, where we've been at those weak yen levels for months now, it seems. And on Friday, the New York Fed got on the phone and started pinging other banks asking for a rate check. You know, what would you quote this yen at? And the interpretation there was, you know, the U.S. doesn't normally do that. If they do, it's usually communicated that it's on behalf of Japan, helping them intervene into these markets directly, a Japan-only liquidity injection to buy back the yen. Without that kind of caveat, markets interpreted as, whoa, this could be a coordinated intervention of buying yen, not only Japan's finance ministry, but the Fed and the Treasury also stepping in. And that caused a nearly 2% move in to the downside of the dollar yen, as you're seeing that huge red candle there. As kind of a self-fulfilling prophecy, you know, didn't actually do anything, but much like, you know, walking up to the mound to relieve your starting pitcher, doesn't mean you're going to take them out, but it's certainly the first step, and not only affecting that market, but started to get the storyline in participants' heads across the board for this dollar narrative that, you know, maybe the Treasury, the Fed, reigniting the claims of this administration might favor a weaker dollar. So that was already in the back of everyone's head from Friday. That's how we stumbled into this week. And so when the president got out there and pretty much outright said, you know, we don't care for a stronger dollar. We are more than tolerant of a weaker dollar even from here. That caused the absolute, elasticity we've seen in these dollar markets that we haven't seen for months, even coming up on a year since we've seen that kind of volatility. And the funniest part about the yo-yo comment was sitting here on Wednesday, when we're looking at dollar charts, we're seeing a pretty significant uptick back in the US dollar, not nearly to the degree of the shakeout, but still pretty sizable across the board, 0.5% here and there. That dollar yen that we're showing, almost 0.75%. And that comes on a yo-yo-like walkback from Treasury Secretary Bessent this morning on CNBC, when it was very apparent, trying to calm things down, but worked enough, reaffirming that the U.S. has always had a strong dollar policy, and they're just trying to set the right fundamentals for that story first. And if they have sound policies, then the money will flow in. So a pretty interesting there, and explicitly denied intervention speculation. And so that's where you get back to that dollar yen market of, if we shook out almost 4% here over these few days on specifically a majority of that on intervention speculation, just how much would you give back if this is denied? So a real game of confidence right now in these dollar markets, trying to speculate on what administrations are going to do. Perhaps that sets the board for, if you believe there won't be any immediate intervention, maybe this dollar yen has more correction in store. But the tough thing that we've seen from the past year of dollar price action is, once we get people hedging outside of the U.S. on that selling U.S. assets trade, it seems to be a lot harder to get back into it, as we, regardless of this recent move, we're still sitting down 10% from a year prior against a ton of these major currencies. So a ton of back and forth, perhaps a tension in the administration, or you could see right through it and say, well, Trump, said one thing, and this is just kind of an attempt to publicly walk it back. So regardless of, your directionality, perhaps a lot more information now from not necessarily a fundamental macro pure number backdrop, but in terms of the key players, getting a little more information on how people are treating the longer term view of these currencies has made it interesting, particularly, the bull and bear case. I mean, you have a short-term bull case in the form of, if this walkback, you believe this walkback is the true policy, he's the one in charge of a lot of these, the Treasury, perhaps some more movement back from some pretty elastic markets over the past few days. So if you're agile enough to try and play both sides, perhaps some bull cases there, but adding to the medium term bear case for the US dollar with, you could see it similar to a lot of these other like Asian countries, like the yen, don't necessarily mind a weaker currency, but do mind the pace at which we get there. So if this walk back is just saying, hold your horses for now, we can get there. We have no problems getting to an even weaker dollar, but not so fast. Makes for some interesting trading opportunities if you have the conviction directionally to parse through all this. But a lot going on, a lot of flows in and out of these FX markets, a lot on the table in the form of not only the policy announcement today, the rate decision, but if the government will shut down over the weekend. Also something to a near-term catalyst to consider heavily, because we get a dollar that performed historically worse on average during the shutdown. But we've seen that this most recent example doesn't necessarily mean it'll happen right away. Regardless, we'll get a new spending amendment agreement. We'll come to some consensus there, and that'll be adjudicated independently by these dollar participants. So, ton going on.